What's up, YouTube? It's Joe Catapaglia sitting on the couch making some money investing in fractional real estate online as usual. Today I'm going to be going through the Hoosier. It is Mogul Club's most recent short-term rental. It's in the Smoky Mountains, 7-bedroom, I think 5-bathroom, and accommodates 7-bedroom, 6-bathroom, sorry, and accommodates if depending on the source anywhere between 16 and 20. Although the contract looks like it is contingent upon 18 guests being allowed in the property. So, or that's the number I'm going to go with, is 18. Its year one yield projected at 7.9%. It really seems like this just under 8% is the new normal that we should expect. We've seen it quite a bit lately. I've talked quite a bit about it, right? I don't love it, right? It seems like their projected yields are coming down, although some of the other short-term rentals had lower projected yields up front, where the pad splits are really where we saw the fatter yields on the front end. But anyway, 7.9%, average yield 11.4, levered IRR 12.1. That's their projection, offering, $750,000 is what they're trying to raise. It looks like, let's see how much they've raised so far. 122,000. I haven't refreshed this though. Let's see if anybody else bought more. 123,000. So I mean, it's been up a day. It's selling pretty quickly, just like everything on Mogul. As I mentioned, this is in the Smoky Mountains area near Smoky Mountains National Park. If you saw my video about the Dolly, I think I said Dolly, it's near Dolly World, but it's actually Dollywood. I knew that. I just was saying dumb stuff. Let's see. I wanted to share the listing, the Airbnb listing, just so you can get a sense of some of the pictures. And I mentioned a few things about this. So it looks much more like what I want if I'm staying in a cabin in the Smoky Mountains. I think I'd much prefer this one over the Dolly, just from the way that the property is situated on the site and what it looks like the views are, because it looked like the Dolly didn't really have any, and it looks like this one does, and they say so. So, I don't know. This one more just strikes me as if I wanted to go stay in a cabin in this area, if that were what I thought was a great vacation, sometimes I might think that, then it looks more like what I'd expect. There's a couple things I'm going to point out in the pictures. So it looks like they really went all out on some of the furnishings, and then there's a couple spots where they really cheaped out. Like these things, right? These are like just for the hallway to put your shoes and hang your jackets. And I know these are super cheap because I have this exact one in my house. I think I bought it for $59 on Amazon and put it together myself. I'm a cheap person. I keep cheap stuff in my house. But when I'm, furnishing an STR, especially when it's one of the first things people are going to see, which I'm assuming if it's a coat rack, they're going to see that pretty early. You want to have stuff like this. I mean, this was smart, right? They have the little welcome sign and the guest book. So they really went all out with your first impression, but then quickly, like it just seems like at this price point, put a couple of really nice hall trees in there. There aren't too many. Most of it looks like they spent some money. They do have a sauna. There weren't too many spots where it looked like they cheaped out. I really like this. I almost bought this from one of the STRs I put together a while back. That's just my aesthetic, though. It doesn't really matter, right? Let's see what else there was. You can see this is getting pretty worn. I think in a cabin that's okay. Oh, the only other thing that looked like they really cheaped out on. I mean, a lot of the stuff is nice, right? I like the look of these bunk beds. I think they really fit there. The bathrooms are just they're okay. These are fixtures that I, tried to put in a container home at one point, which I think they fit there. Do they fit in a cabin? I don't really know. And you can see they use those in a couple different places and then, didn't match them everywhere. Yeah, these chairs, I'm not 100% sure, but these look like they just got the plastic Adirondack chairs, and we've had those in some short-term rentals and just had to replace them constantly. I mean, I've broken a lot of chairs like that in my time. just being a hefty guy, right? So it's one of the things that I usually want to go all out and either get, the nice wooden ones, but then you have to keep them painted, or even metal ones, and the same thing. But so yeah, this is what I was talking about. Like, you can see, the way this property is situated, it appears that it's going to have much better. It's right here. I think it's going to have much better views, especially from this picture, than you have at the Dolly. One of the things I think in their pictures, they have a lot of pictures of the interior, but I think they really missed the boat on, like, when we've listed properties like this, if you have a good view right here, you should take a picture out that window, like from in the house out the window. Same thing here. And so, that makes me wonder, well, maybe they don't really. If you remember when we did, if you watched the video on the Dolly, I mentioned some of the best performing properties in this area, it's going to be because of their views. And that's often true when you have like a mountainous area, right? You can have two properties that the building is exactly the same, but because of the view you get, they're going to be different. And so from here, it really looks like you have that. So I think that's good. I like that their listing included their floor plans. That's one thing I'm going to point out in a minute. I'll remember though. Oh, they've got the Miss Pac-Man. They've got, the games. They really went all out here. They mentioned beautiful views with frequent bear visits, and they have a picture of a bear like right at their gate. I don't know that that's appealing to me. I'm not sure that I want that. So I thought that was kind of interesting. Telling you, okay, 25 minutes to Dollywood. That's actually further than I thought, but 3 minutes to the entrance of the Great Smoky Mountains National Park. And that's really the appeal to people staying here usually. So anyway, this is their Airbnb listing. It looks pretty professional. One of the things that they meant that Mogul had mentioned was, it's currently self-managed. And so we're going to have professional management, and that gives us the ability to have some upside. Yeah, it has been self-managed to date. I don't think this is, I think it's probably technically true. But this is the host. Oh no. So that listing, it's a pretty nice listing, although there are some tweaks that I would do to it, but I think that's true of every, short-term rental listing I ever see. There's always ways to improve them. But if you look at this host, okay, hosting for 13 years, 1,900 reviews, super host, and has, several listings, right? Like, this isn't their only listing. So it's not as if, there's somebody who owner occupied their house and then went out and listed one home. So maybe they're the owner and they are owner managing it. But it's certainly not, it's certainly not the mom and pop operation that self-managed makes me believe it would be, right? It's somebody that has a lot of experience, a lot of reviews, and a fairly good rating, right? So I just wanted to point that out. Sometimes I do feel like Mogul, they're, and it's their business. They're trying to market, but sometimes their spin on stuff is, and is a little bit questionable, right? And that's one of the things, like, okay, yeah, clear opportunity to outperform historical results. Maybe not. I have found there, if you have a good professional manager in an area, you can often outperform an average mom and pop operator. But a lot of times, some of the best operators in markets are people that have, 7 to 10 properties in that market. And they have a small enough number of them that each one of them they really care about. But they have enough of them that they've, in one concentrated area, that they benefit from some economies of scale for cleaning people, maintenance people, just generally running out to the property, that sort of thing. So I'm not sure, to me, when I look at that current host, it's hard for me. And I guess too, there is some times where the property is hosted by someone who's not really managing it. So maybe that's not the relationship that there is, but that's, I'm making some assumptions there, but that current, seeing who's the host is currently, does not make me think, oh, clearly there's a real opportunity here to outperform. And they did say potentially, but, and so, they did say, year one underwriting, $234,000, and that for the last 2 years, they exceeded this year one underwriting. So we're going to jump into that in a little bit. First, I want to talk a little bit more about the market. In the beginning of the Dolly video, I talked about it a little bit, but that was in the Pigeon Forge submarket of this area. This is actually in Gatlinburg. One of the things that I thought was interesting, the Pigeon Forge, Pigeon Forge itself was actually grew over, between censuses by a decent amount. Gatlinburg shrunk by 9.3%. Now, I don't think that the value of these properties comes from the demand of owner occupants, so I don't think that matters a whole lot. But it was pretty interesting to me, to lose 400 people in a town of less than 4,000 seemed like a lot. So I don't know if there was some reason for that. If anybody knows what happened, and especially why Gatlinburg performed so much different than Pigeon Forge. Did everyone just move from one town to the other? What's going on there? I don't know. If I were going to invest in this one, which I don't think that I'm going to, I think we have a little bit of time to decide. But if I were going to, I'd want to understand what's happening. Why those two cities performed so much differently over that time period. I did look at Zillow's home price trends in that market. Over the last year, down 9.5%. I mean, that's a staggering amount to be down. I'm not going to just really belabor the point of what this market's like, because I talked a lot about it in the Dolly video. But it is a market that had a ton of attention from investors and a lot of out-of-state investors watching Bigger Pockets videos about this area and about how much money people were making. So it was one of the markets I think of as a meme market, where just a ton of people flooded. And I think this, the prices coming down so strongly are really a reflection of that. Now, it does look like here maybe we've bottomed out. Obviously, it's going to depend on the state of travel going forward, what interest rates do. Zillow thinks it's going to go up 1.3% in the next year, which again is one of the strongest projections we've seen from Zillow in these different markets that we've looked at. But yeah, so maybe we're buying near the bottom of the dip, maybe not though. It's one of those things that's going to be tough to tell, because like over here you could have thought you were buying at the bottom, right? Because you had a little bit of a flattening out too. So yeah, anytime you have a market that just gets a ton of like this internet investor attention, I get nervous about those markets, right? San Antonio got a little bit of that. We weren't quite as bad. Austin obviously experienced a ton of it, and that's why their crash, their prices shot up way more than ours did, even though they're like an hour and a half away, depending on where you're trying to go. And then they had a much more severe crash. We had like a slow decline, and not nearly to the same extent. And so, because now investors, out of state investing is really common. It's become something that lots of people talk about, lots of people do it. And so you start to see these markets just get like really overbought from, in my opinion, when you're looking at, okay, what's the yield we're going to get relative to the price? Anyway, that's, and what's the, we're paying a lot of money for a cabin in the woods, right? I don't know, I don't even think I talked about that yet. So the purchase price, $1.585 million. Total equity raise, almost $750,000. This reserve number again is really large. It is, we've got the 10% reserves for the vacancy reserve and the regular reserve that we raise. But then this is actually 17%. So there's an extra 7 for closing cost or something, 7%. What I think is, some of that obviously is closing costs. I'm sort of, again, curious, is some of that to pay for the furniture, fixtures, and equipment? Because the contract doesn't, at least I didn't see a spot. And again, I could just have missed it again. But I didn't see anywhere where they said, okay, the furniture and the video games and all that stuff is going to convey. Normally that's going to be an addendum to our contract here in Texas. But I don't see anything in their contract there. So I don't know. And I tried to, Control F search for it, and it doesn't search very well in this document. I don't know why. it easily picks up the blue stuff, but it doesn't get all of these, and I'm not sure what's going on there. But yeah, if anybody, read this more carefully and saw a spot where it actually, contemplates what's going on with the furniture, fixtures, and equipment, I'd love to hear about it. But if not, my assumption is we're paying for it in this number here. So in the past, when I've looked at some of these, I've just assumed that, okay, that purchase price, we're kind of getting that stuff for free. And so, kind of makes up for if we're overpaying. Here, I don't think that's what's happening. I think we're actually paying for it out of this number. It'd be good to find out if that's a safe assumption or not. Let's get some easy stuff out of the way. The flood map looks like we're not in any flood zone. Now, one of the things that I don't know that I've ever talked about, I've experienced this in some markets where you can be, if you're in a pretty remote location, sometimes you're not in a flood zone, your property's not going to be affected by it, but your access to the property could be affected by floods. And so that's one of the things I started to wonder when I was looking at this map. Are some of these, is our access to this property going to be blocked off when there are floods? I tried to follow the map. It didn't really look like it to me, but I don't know that for sure. I don't know that this is a market that's really prone to that sort of issue, but it's something that if I were going to put a bunch of money into this, I'd probably spend some time looking at that, because it is, like I said, I've run into it in other markets where it's not something you really think about, right? You look at the flood map. I'm not in a flood zone. I should be fine. But if you are, like I said, in a remote location, there's only one road that that gets you there at any reasonable period of time, and it's known to get washed out with floods. That can be problematic. So that'd be something I'd want to think about, but I don't have any reason to believe that that's actually the case. I just wanted to mention it because the way this is set up just made me think of that a little bit. The crime map, again, looks like they just don't even report crime in Gatlinburg is what it looks like. I don't know if anybody did some more research after we looked at the Dolly and saw a similar map. I'm curious what's going on. Is it that it's just not reported? Is it that spot crime just doesn't pick up their reporting? I don't really know. But again, looks perfectly fine for me. And, you're pretty remote. I'd expect the crime to be a relatively minor issue. Didn't really look much on this. Oh no, I just did that. Let me close that. I don't know. I don't think you guys can see what just happened, but when I do my little video thing, every once in a while I hit the little drawing bar and it's a problem. But when we do the street view, yeah, you can see. Oh, it's not too. Oh, did it not? Google didn't drive up there. I'm actually not even sure if that's the spot. But yeah, I mean, this is what I want, right? I don't want to be at the bottom of the hill. I want to be up here and be looking out a little bit. So I don't know. It seems like the positioning of our property here is better than the Dolly, but not 100% certain. This is one of those markets where you really have to trust your local professionals if you're not out there and looking at it. I mentioned this before. Here in San Antonio, one of our sub markets, people. We have a little lake just north of us, Canyon Lake. A lot of people go up there. It's very hilly. And if you were to rely on, just the street view and Zillow and, all the website research you could do, you would probably end up overpaying for a property at some point, because it's really hard to pick up, what the views are going to do, what the access is like, how the property's situated on the lot. And so that's it's one of the risks of buying in a market like this when we're not local. I am curious, I've never asked about this, but if Mogul is doing site visits, scoping out these properties ahead of time, or if that's something that they only do after it's under contract, or it's possible that they don't do it at all and then they rely on, local contacts, the manager, the inspector, contractors. I've never actually asked about that. And for the most part, I'd not, I've owned properties that I'm nowhere near, and I don't have any problem with that. I've sold properties to clients all the time. A lot of out-of-state investors buy properties here in San Antonio. They've never stepped foot in the property, but they have, me sending them video of it, and they have, the property manager who they're, whoever they choose to use is giving them details and telling them what, so you can just rely on other people. But I think that the more a market has very unique properties, the more difficult it is for me to want to do that, because there's just all this nuance and it can be lost. And so I think this is a good segue into, let's talk about the valuation. We're paying 1.585 million. The Zestimate is 1.280, which, okay, that's already low. But then if we go to realtor.com, 811, and Redfin 829,000. Now, one of the issues with this is, when you can look at the comps that they use, like, they're nowhere near us, right? In this kind of market, I'm always complaining about we're cherry picking, they're cherry picking comps for other properties. Oh, why is that? Okay, let's just get that closed. Okay. Having all kinds of problems with my touchpad, so I just closed it. I'm always complaining about, they're really just cherry picking their comps. But in this type of market for this type of property, the appraiser is going to have to cherry pick comps, and that in order to be accurate, right? Because they're not all cookie cutter, all the same property. They're not all, and like I was talking about before, one could be, you could have exactly the same home, but if they're situated differently on the mountain, so that one has significantly better views, different access, different, the way it sits on the lot, all of that can create a lot of value that's not going to get picked up by, so far it doesn't seem to me that platforms like Zillow or, any of the Redfin or any of them are really picking up that pricing and making the adjustments for those sort of intangibles. And so this is one of the instances where I trust the appraiser much more than I do any of these third-party websites. And I really learned this, not really the hard way, because I didn't buy anything and I was smart enough not to sell something to my clients in that market till I figured it out. But, being in markets like Canyon Lake and similar markets is what really drove this home for me. I saw people that had overpaid for properties with no views, properties with terrible access, all sorts of these different things. And they were like, yeah, but look, Zillow says it's worth this and I can't sell it. And, so have people come to me that have bought it, overpaid and we're trying to sell it. People are trying to flip in those markets. It's just horrible, right? Because they just looked at other properties with similar finishes and didn't really think about a lot of those, the things. It's amazing how much difference a view will make in what somebody will pay for a property. And it just is. And so I'm not too worried about the valuation on this one, because we do have a financing contingency, which includes the property needing to appraise. And like we've talked about before, even though we've had that, I still want to be able to get some third party confirmation. But in an instance like this, where you just have a very unique property, without spending a ton of time, I'm just never going to know, right? I'm not going to be able to second guess the appraiser in this instance. Where in a lot of markets, I feel very comfortable doing that, because I can tell, okay, there were all these nearby sales, but we passed them up to pick higher sales. And, that whenever I have accused them of cherry picking, right? I think it is like it's, to try to hit a certain value. Like it's, here, like it just makes a lot more sense to do it, because especially because these are all destination properties, right? Somebody's coming here. They're not trying to buy a home that is, okay, I want to be close to a certain school and close to my work and whatnot. We're going on vacation. I'm trying to be, in general in this area. Let me find the coolest home and scroll through a bunch of pictures, right? So anyway, valuation. Yeah, I don't love that Zillow and Redfin and Realtor all think it's significantly different than what we're paying, but I don't think that that's necessarily a huge red flag on this one. But again, if I were going to invest a lot in this one, I would want to spend quite a bit of time looking at other properties and make sure, is this the most expensive one that's ever sold in Gatlinburg or in the Gatlinburg, Pigeon Forge, like that whole market. And if it is, then I get a little bit more worried, right? And unless it's okay, it is, but it is by just a little bit, right? I mean, this is one of those things where there's just not a clear and easy answer for it. Let's see. I'm just going to close some more tabs. So I don't even know if it's obvious in the recording, but my video is hanging up. Oh, one of the things I don't think I mentioned, and I looked at this Gatlinburg Pigeon Forge, the overall market in the Dolly video, so I'm not going to do that again. It's pretty similar, but this submarket, well, I think I will show it to you real quick. So, it's rated 82, but we're actually in Gatlinburg, which is 87. It's a little bit better than that, the market as a whole for the score. But like if you look at annual revenue growth, it's declining. Occupancy is declining. Average daily rates declining. RevPAR is declining. And obviously RevPAR is if all those other things are. I always just kind of wash over this. If you don't know what that RevPAR is, that's revenue per available room. And so you're basically taking your average daily rate, you multiply it by your occupancy rate, and that's what gets you your RevPAR. This comes from the hotel industry, really. Obviously that's why if you're in short-term rentals and, short-term rentals are new to you, you probably haven't seen that. And so, and it's per available room, but for short-term rentals, they really mean per like night that it's available, that the whole property is available, it's not actually per room. That's why, taking that from the hotel industry, they were looking at each room. Here it's by, one property to the next. So, okay. Yeah. Looks like we have declining, revenue. So it does, lead me back to, well, we're projecting below the last 2 years, the last 2 years income exceeded what we're projecting. Well, are they doing that to be conservative, or is that just realistic because revenues are declining? It would be interesting to hear their insight into where they think those are going, right? Is that going to continue to decline? Do they think it's going to turn around? I've talked about, before I forget, please like and subscribe. In the description of this video, I have links to all the places where I currently invest in fractional real estate online. Some of those links are affiliate links, and then you'll get a little bit of money when you make your first investment, or maybe an investment of a certain amount or something like that. Some of them aren't, and then Lofty says it is, but at the moment it's, they haven't been paying it out for quite a while. They say they're going to honor it in the future. I hate to have to mention that every time, but I get nervous about having the affiliate links up there and not saying that that's what they are. And then once I've mentioned that, then I don't know, I can't say anything quickly. So sorry about that. Also, in the description of this video, I have a link to the Discord where a whole bunch of us, over 200 of us, talk about fractional real estate investing on a whole bunch of different platforms. So please feel free to jump in there, join that conversation, ask questions, share info. I mean, we're just trying to create a community where we're helping each other. When you're in there, or if you do join Discord and you join that group, you will probably get contacted through DMs by someone who looks like me. There are several imposters. No, I'm not trying to sell you any investments or anything at all. I probably will never DM you unless we've had a very significant interaction beforehand, and then I'll let you know that that's what's happening, right? So in that Discord, I actually show up with green lettering, so you can know that's me, versus, but I kick the other ones out, but then they still just somehow lurk and find you. All that being said, I was starting to say, but so, I have all those links there, but you want to do all your own due diligence on any of those platforms and any of the properties that I mentioned. Just because I'm invested in there doesn't mean it's safe or that you should do it, right? You want to do your own due diligence. And the same thing with the properties, right? Just some of them, that I've put my money in, I know it's a very risky investment, and some of them I feel very good about, but I can't see the future. So you want to do your own due diligence on all of those, and that's what made me stop and think to mention this. I was about to say, I've come to really trust the guys at Mogul. They're very, they are real estate professionals, right? They aren't tech first founders, which is most of what you see in the fractional real estate space. Most of that space is dominated by people who worked in tech maybe dabbled in real estate and were like, I'm going to change that industry, even though I don't really understand it. The Mogul guys are coming from the other side, right? They are in the real estate industry. And so I've come to trust their judgment on a lot of stuff. So I'd be interested to hear what they think is where the direction of, occupancy rates, annual revenue, all of that in this market are going. Because I think, one of the things is it's easy to see a decline and think we're going to have a continued decline. But sometimes there's more to the story, right? Sometimes there's, is it that there were just a whole bunch of new hosts that bought properties there, set them up. There was a lot of new construction, certainly. And, the market got saturated. Yes. I mean, is it coming from supply or demand? Because demand can fluctuate and there's not a lot you can do about it. But the supply side, it's a little bit easier to see what's going on. Is there a lot more getting built? Are a lot of people getting out of the business, right? Like some of these, even though, yes, they're not probably most people's primary residence, there are plenty of rich people out there who will just buy a second home in one of these markets and won't list it, right? Won't have it on Airbnb or anywhere. They'll just use it, and the rest of the year it'll be vacant, or maybe they'll let friends use it every once in a while. And so, when you see that stock come off the market, some of that housing stock come off of the short-term rental market, then, obviously that could be, boost our revenue. So one of the things I think next week they have their webinar. If this property is still listed, maybe some questions about that for them would be interesting. But just in general too, like, I get really scared about buying a property in a market where I have to project, decreasing revenues. And that's not what they're projecting here, right? Like they are projecting a lower revenue year one than what they had in the last couple of years, but then we're just going up from there. One, I'd like to know how much they made in 2024 and 2025. Excuse me. Was it more than year two? Are we just below it, or it would help to understand what this growth could really look like. So I don't know. Some of that detail would be interesting. I did find this property on AirDNA, and this came up with, I think, the Dolly as well. It shows that it was only available 316 days, and in that time made 180,000. 179, and so it projects 212 as the potential. Well, if you remember the discussion on the Dolly and some of the other ones, well, AirDNA doesn't pick up every single platform, right? This is Airbnb and VRBO, and I think they might actually pick up data from a couple other sites. But so a lot of times when it says it was unavailable the other 49 nights, it was because it was blocked off because it was listed on another platform or maybe booked directly. And so, we're only $50,000 shy of what their year one is. And so I believe that in those 50 days that it's perfectly possible. It does seem pretty tough though, right? With your average daily rate being $877. But if they did direct bookings on some of their, on their biggest, most popular weeks, which is often when you'll get those direct bookings. And I think it's possible. Although I don't know, I have come to trust them when they say, okay, we have this, this is what it's been, right? That we have the historical numbers. But it does always make me a little bit nervous when AirDNA doesn't corroborate the historical numbers that we're told, right? Because it's thinking the potential is 20,000 below what it actually is. Now, one of the things I think, it's probably pretty safe to assume that all the days that it wasn't available, or most of the days that it wasn't available, it was rented out. Why is that? 49 times 877.9. So, that's 43,000. If we add the 43,000 to the, it gets us to 222. If we had it at the average daily rate, but again, maybe it's some of your best rate, some of your best times, that you booked directly. It's tough to know. It is, did this dip happened because it was actually direct booked some of that time is what, it would be all this, all the questions that I bring up. A lot of times I do it. I think it would just be great if Mogul and all the platform providers just gave us more and more transparency. I mean, I really like Mogul's numbers and their projections that they give us. Like, we have a lot of detail into what they're thinking going forward, not just like, okay, it's going to be 6%, which is all we get from some platforms. But I think even more detail of, okay, how do we get to that number, right? Why, if we're all going to look at AirDNA or we're all going to look at certain things, how are we different from that, right? I'd love more explanation into some of these things, whether they just, have like maybe another tab for us nerds or, because I know they're trying to do it and they're trying to present this in a way that is very user friendly. And obviously, people are really happy to invest without knowing the answers to these, right? I mean, Mogul is selling out. They're just selling out properties left and right. There's a ton of demand for their product. I understand, because in my mind, they're the best platform out there. Even with what appears to be a declining quality of their average deal, right? Their average yields are going down. Their average projected annual IRR is going down. Which reminds me, we didn't shut off the refinance and see where that gets us. 11 even and 11.1. Pretty much what we've seen on other deals. But yeah, even though their yields are coming down, they still appear to be significantly better. As long as they hit those yields, they're going to be better than almost, the stated yields of the vast majority of platforms. The tax treatment should be better, as provided, it continues to be treated as an investment club. They do have, I was reading the warning at the bottom of this that, it's set up as an investment club. It's not an approved investment club by the Securities and Exchange Commission. Okay. So, these at some point could be treated like securities. I'm not super worried about this, but at the moment, we're just getting K1s, and this is, like a partnership return, and I get to be taxed on this like like I'm owning real estate directly. And so that's a huge benefit to me that we're not getting on another platform. So for me, I'm okay with that other risk. Obviously, that's something you might want to dig into. I have heard a lot of people that lately there's been a lot of people that have said, no, if it's not a registered security, I don't want to do it. Which is fine, right? I mean, it's all about risk preference. It's about what makes sense for you. And even though this is my favorite platform, I still don't have very much money on here at all. I'm trying to spread it out across multiple platforms, but it'll be a while. Yeah, I have a little piece of 16 different properties, right? And I don't, the property with the most I have in it is only 5,000, and it's, I'm not betting the farm on anything yet. And I think that's important. I like to point that out every once in a while. Because I do spend a lot of time talking about all these different platforms, and I do have some money invested in a lot of them, but I'm still not, I still think there's a lot of risk overall in fractional real estate investing, and we need to just be cognizant of the fact that, a platform that's good today might not be tomorrow. Things change. Most of them are still in their startup phase. They've been operating a year or 2 years. With the exception of like Mogul or Ground Floor, which has been, I think, 10 plus years, and Arrive now has a pretty long track record, I think, but not super long. It's not, maybe 5 plus years, 6 plus years. I'm not sure. But so it is. I think I haven't mentioned it in a while, so I want to just say that you want to be careful. Like, there is platform risk with virtually all of these platforms, and I think it's top of mind for me today because I have talked to a lot of people building platforms today, and luckily there are some out there that are really thinking about what that risk looks like to us as investors. And I think we'll see even more innovation in that product, and these products that we are offered, and opportunities to just to improve. I think all of them will just continue to improve, hopefully. I mean, some of them obviously have declined, so I don't know. I think I got to that rambly point of talking. So if you're still watching this, almost 40 minutes in, thank you for supporting the channel. I appreciate it. Please, feel free to put in the comments, is this one that you're going to buy? Any questions that you might have, I always like to answer them if I can. But that's really it. Like I said, I think I'm going to pass on this one. The reason why, I really don't like that it's in a market that's declining in revenue, that is also declining in population. I would want to do a lot more work on the valuation to figure out, like, okay, why is this so far off of what some of these platforms think? I mean, I think I know the answer to that, but I'd want to really dig into it more. And yeah, for a short-term rental, it just, if we are heading into a recession, it's just not the best time for that product. Although, like I've mentioned, where we saw the big decline in prices, maybe we are buying the property at a dip right now, or maybe it's going to continue to go down, right? Losing almost 10% in value over the last year is a little bit scary, to then turn around and assume that it's going to go up next year. Anyway, that's it for me for today. Until next time, I'm just going to keep making mistakes so that you don't have to.